Hey there, for those of you that don't know me, my name's Priya and I am a partner at Mac Kotecha and Company, the specialist dental accountants. So what I want to talk to you about today is buying a practice. And again, this is a question I get asked a lot. Should I buy a practice? Will I be better off if I buy a practice? Will I make more money if I buy a practice? And then, of course, looking over specific practices to see if that is a good fit to you. What I would start with what I would start by saying is that you should only buy a practice if you really, really want to practice. You literally have to wake up each morning and think, gosh, I really want to buy a practice. If that's not happening to you, then I don't think you should buy a practice. Buying a practice purely for the financial return is not really something that I think is wise unless you are open to having to deal with a lot of the hassle that comes with it, because it is hard work. It's not like when you're an associate where you go into work, you do your 9 to 5, you can leave. If a nurse is upset by something the receptionist has said, or if the compressor's broken down, or if there's a flood, it doesn't really matter that much because you don't have to deal with it. You can go on holiday, you don't have to be on call all the time, and you can pretty much just switch off when you're not at work. Not so when you're a practice owner. It is like having another child. So you need to be prepared to deal with that. Let's say that you decide that you really do want to practice. So what do you look for? Well, what I would say is it's a little bit like when you're buying a house. You need to get out there and see practices. And the more practices you view, the more you will get an idea, probably not of what you want, but more of what you don't want. And it's also really good practice. It's good experience for when you do find the right practice. So I would suggest that you get on board with as many of the brokers as you can. And if you find a practice that seems appealing, go and view it. There's no disadvantage. The second thing I would say is to absolutely trust your gut. It sounds like a silly thing to say, and it's not really very scientific, or in fact, I believe there has been some scientific evidence for trusting your gut, but your gut feeling can actually tell you a lot. So certainly don't ignore it. If you find a practice and it looks perfect on paper and you just have a little bit of a funny feeling about it, tread carefully. The third thing I would say is it's important to get your accountant's input as well. Hopefully, you already have a specialist dental accountant on board. If you don't, get in touch with me. Well, one of the things that we actually do is look over practices for you. Not to see if it's the perfect practice, because, like men, the perfect practice does not exist. What you need to do is to find a practice that is a good fit for you. You need to find a practice that is going to work well with you. It doesn't have to be running amazingly already. It may even be loss making, but that's not to say that it's not the right practice for you. Remember, when you're buying a practice, you're buying future potential. You're not buying past performance. Although past performance is, of course, an important consideration, because if you buy a practice and the principal says to you, well, it's grossly underperforming, or we're only turning over 100,000 at the moment, but actually you could turn over easily 800,000. It's obviously a massive jump, and we need to do a little bit of a reality check there as well. The next thing I would say, in the same vein as checking with your accountant, is to review the accounts very carefully. So normally what I do is I say to my clients, if you've seen a practice you like, send me the accounts, send me the prospectus, also send me a little paragraph about what you thought about the practice, because that's really important. If I'm a little bit sitting on the fence about a practice, if I'm not too sure, that gut feeling that you've had will help me to decide either way. And then what we would always do is to do a little bit of a forecast for what we expect. It's not an official forecast, but just a rough forecast as to what we expect the associate run profit to be. Now, associate run doesn't mean that I'm saying to you that you shouldn't do any clinical work there. But when you're the practice owner and you're also the clinician, or one of the clinicians, it's important to remember that you're wearing two hats. You've got your clinician hat and you've got your practice owner hat. And just because you're working there as a clinician, it doesn't mean that you want to subsidize the practice by working for free. So what we need to do is we need to pretend that actually if you're paying yourself as an associate, or it's a little bit difficult to imagine sometimes, if you just pretend you're not going to do any clinical work yourself, you're paying an associate or a therapist, whoever it may be, or a hygienist, to actually do that, gross that amount, what will the profit be? And then we can factor in for the next part of the forecast, which is the cash flow, if you are actually going to be working there, because obviously some of that profit, which at the moment we've got being paid to an associate, is actually going to be paid to you as the clinician. So we can factor that in. We can factor in your tax. We can also factor in your loan repayments, because if you're taking out a loan to buy this practice, then we also need to factor in the capital loan repayments that you're going to have to make, which won't impact your tax position. It won't impact your profit, but it's an extra cost that you have to pay out. When we're doing the cash flow, we can also look to see, in case you'd be working as an associate elsewhere, or you got a hospital job, or you got some rental income or anything like that, we can factor that in as well to see what the position is, to see, well, actually, is this doable? Does it mean that you're going to be living off beans on toast every single day, or will you actually have some surplus income left over? The next thing we would also do is to look at how we're going to structure the practice. This is important because it will have the direct impact will be how much tax you're paying. So for this, the forecasts that we've prepared will be really important. It will also be really important to know how much you need to live on, what your future plans are. Are you planning a big house purchase anytime soon? Do you really want to buy more practices? Do you want to build up a property portfolio? So all of these things are really important. So again, chatting with your accountant about what you want going forward is going to be really important. I hope that's been useful to you. If it has been, please do click on subscribe so you don't miss out on any of our videos. Thank you for watching. Bye.